Hello there, and welcome everyone to our ninth episode of the Wyckoff course. So, what we are going to talk about today, without any further, double meaning jokes, is the Climax event. So, we have been talking about events. In the past, we talked about the Wyckoff method, the three fundamental laws, accumulation, distribution, and in the last class, we talked about the preliminary stop, and we talked about it being something that happens before a distribution or an accumulation. Now, the climax is the second event of the Wyckoff methodology, and it appears after the stop, the preliminary stop, and it also initiates what we call an accumulation or a distribution. Okay, so what selling or buying climax is, in very simple terms, is this, just ecstasy in both directions that happens usually in a period of distribution. Okay, so for example, here we had an example of a preliminary stop indicating that there was some selling pressure introduced into the market because the tendency to go up suddenly stopped. And here is what we would call the buying climax. So first we have, an euphoria moment in the case of the price going up, just a crazy euphoria moment of people seeing, their huge returns and whatnot. Okay, and let's switch back to a lower resolution so we can see it better. So for example, here we have, basically three full weeks of price just going up, really, really crazily. So it went up 90% in 24 days. Okay. And people were crazy about Bitcoin because they thought Bitcoin was going to be the asset of the future. And well, what happened afterwards was precisely this push down, this very violent push down. And so in just um, in just 8 days, we went down 25%. Okay, so and this kicked off the great distribution that we saw here. So with this first buying climax, this first, test of how much people are willing to buy into an asset, then comes a distribution. Okay, and this is a very, very, a textbook example of a climax, and this distribution in general was, just exactly as Wyckoff described. Okay? All right. So, one thing that you want to keep in mind is that we don't always have preliminary support or preliminary supply events. Okay? And that function can be performed at the same time by the buying climax or the selling climax. All right, so this is, for example, something we saw back here, right? In this accumulation range here, this smaller accumulation range here, we didn't see any, preliminary stops, right? We didn't see any of that, but we had a selling climax here, okay, around here. So it went down very violently and then suddenly it pushed up. It made that little V-shaped recovery that makes people a little bit hopeful. Okay, so the role of the preliminary stop can be performed by a climax. All right, so for us to identify the climax, there are a few key events. Okay, so first, there are two things that can happen after the climactic event. So we can either have a reaction, so what we would call later as an automatic rally or automatic reaction, or just lateral movement. So usually, if we see a reaction, it will be followed by a secondary test. And if we see lateral movement, then the market would most likely continue, in the previous trend. Okay, so usually if we see a reaction such as we saw here, then we have some tests to the downside and afterwards to the upside. Okay, okay. So another thing that and Wyckoff and Ruben points to us that this is described as no supply and no demand, but within the volume spread analysis approach, which we'll talk about in the Wyckoff 2.0 course that I'm going to do later for the Crypto Garden. Okay, so another thing that is very important to emphasize is that the climax is not necessarily, the highest high or the lowest low of the structure, as is the case of this climax here, right? As is the case of this climax here and the case of this climax here. Okay, it's not necessarily the lowest low or the highest high, but it does represent a moment where people's emotions in trading are amplified to such a degree that it's really a climax both in price action and volume and whatnot, but also in the emotions of the traders, you know, doing all of that movement. Okay, it can appear in the graph in a few different manners, which we'll go through later, as I've given a few examples already. And the psychology of it, as with the preliminary stop event, there are three different groups that participate in this event. So first there is the greedy, which, much like the preliminary stop, they just enter the market because they fear missing out. They enter the market with FOMO. Okay, there are the fearful. So the fearful, they exit their positions because they fear they will lose more. And then they are the smart ones, which will, they will protect themselves and they will try to open positions and start accumulating or distributing. Okay, so they are trading with the Wyckoff method in mind. All right. Now, the Climax has a few uses, and the main uses, as Ruben points to us here, is that we must stop thinking about continuing to trade in favor of the previous trend. So when we see, this big recoveries, you should at least for a little bit start cooling off, okay? If you are a very avid trader and you've been shorting, for example, during this movement here, when you see this automatic reaction up, that is the moment where you say, well, it's better for me to sit on my hands for a little bit, watch the trend, and see where this goes. All right. And finally, we are facing the last clear opportunity, if this is confirmed to be a climax, to take profit on our open positions from before. So if you see an automatic reaction, if you're shorting and price suddenly goes down, goes up by a large percentage, it's not a bad idea to take some profits on your short positions. And so, conversely, it's also not a bad idea to take profit on your long positions after you see these events here. So if you see it going up a little bit afterwards, it's not a bad idea to take profits, especially if you are in deep profits. Now, of course, I'm not telling you guys to sell everything that you have to close all of your positions, but taking some profit is always good. And in my experience, just helping people in the crypto garden and trying to, figure out what is going wrong, why are they losing so much money, the most people I see, they do not take enough profits. It's never a bad thing to take enough profits. No one ever lost money from taking profits. So please be a little bit mindful about that. Okay. All right. Now, in the chart, we have the selling climax if it is starting an accumulation, and it is, represented kind of like a preliminary stop, just like we talked about in the previous chapter. So we can see it here. So there are a few different, formations, and they can vary depending on the chart time frame that you're using. So it can, go down, side for a bit and explode up, go down and explode up immediately, and go down and explode up in the same candlestick, forming this, kind of hammer pattern. Okay. So this is how you identify it, how you see it looking at the chart. Okay, it is a very powerful sign of strength, and just because it is supported by these negative news, there is a point where that selling, that negative market emotion in the case of a selling climax, is simply unsustainable, and so it goes up afterwards, and it starts the phase A of the Wyckoff accumulation or distribution. And there's the selling climax or exhaustion, and the buying, exhaustion we'll talk about a little bit about later. It is one of the patterns that we have, but essentially, just take that into consideration. And then there's buying climax, which is the reverse. It is the same thing, but for a bullish market, for a market that has been trending up. Okay. Now, again, you can debate whether it is a buying climax or exhaustion. We'll talk a little bit about later in exhaustion and how to identify those. So stay tuned for that. And finally, on the next class, we'll talk a little bit about reactions. So the climax event is specifically this point here, and the reaction is this movement. So we have talked about, the three fundamental laws of Wyckoff, and one of them is the law of cause and effect. So basically, this is the cause, like this buying climax here, and the effect is just trending down that movement. Okay, so we'll talk a little bit about this in the next class. And until then, if you want to sign up for more content, you can go to thecryptogarden.io, sign up for exclusive newsletters for a future course that I'm going to do on Wyckoff 2.0 and a lot more stuff. So yeah, I think this was about it. Thank you and goodbye.